Welcome to the third video from Emoji Trading explaining how to read order flow using Sierra chart numbers bars in conjunction with the Emoji Trading order flow suite. In this video, we're going to cover how to read powerful buying or selling activity. Let's think about what makes price move. It's volume, buying and selling. This is basic economics and it's really important to keep this in mind. If we have more buyers than sellers, price rises, and if we have more sellers than buyers, price falls. Let's go back to our basic numbers bar chart template. You can download this from emojitrading.com/downloads. As you can see from the chart settings, I'm not using a time-based chart. When we read order flow, we're much more interested in how volume traded across a range of prices rather than how it traded over time, and we gain this insight by using a chart type that ignores time as the trigger for a new bar. Sierra chart gives us lots of options: price range, price reversal, the volume traded per bar, the delta per bar. For the purposes of this video series, all of our examples use the E-mini S&P based upon a 5-range reversal chart, but depending upon what you trade, I encourage you to explore different chart types and different chart periods so that you can find a chart type and period that's in tune with your own trading preferences. Here are some ideas to consider when day trading various different contracts. By editing the study settings for numbers bars, we can highlight when, for a given price quote, the number of contracts traded on one side of the quote exceeded the other side by a certain threshold. We call this a bid-ask imbalance. What I'm doing here is setting the numbers bars to highlight the ask price in blue when 4 times more contracts traded at the ask than the bid, and if 4 times or more contracts hit the bid than lifted the ask, I want the bid price highlighted in red. If you look at the chart now, you can see the effect. In our previous video, we introduced the Emoji Delta snapshot indicator. We can use this indicator to display a summary of the number of buying and selling imbalances within a price bar, as well as the bar's delta. This gives us a really good at-a-glance view of the trading within the bar. We can see the overall delta for the bar, the buying or selling pressure, and we can also see at how many price levels we had imbalances on the bid or on the ask side. Let's imagine you're a large trader and you want to buy 1700 lots in ES. If you look at this DOM, you can see that at 53.25 there are 1630 contracts available to buy, and at the price level above it we've got another 347 contracts available to buy. If I buy 1700 lots at market, and if we assume that this volume isn't replenished, as my order trades, I'm going to consume all 1630 of those contracts which were available at 53.25 and another 70 contracts that were sitting available at 53.5. The price quote will then move to 53.5 because I've eaten all of the available supply at 53.25. When a large trader eats up all of the available contracts in the order book, this is known as sweeping the book. Literally, they consume all the available contracts and the price quote will change. As you can imagine, when this occurs, there's very little opportunity for trade to occur on the other side of the market, and we can actually see price imbalances at consecutive price levels. This situation is something we call a stacked imbalance, and the Emoji stacked imbalance indicator will highlight these price levels using a forward projection zone, and you can also add extension lines that will continue until price retrades at these price levels. Let's think about why this might be important to highlight. If a trader goes long with, say, 2,000 contracts, they're probably going to defend this price level when price moves back there again, and the support of their defense can represent a buying opportunity. Likewise, if this price level isn't defended or their defense fails, it's pretty clear that whoever the large trader was who bought at this level is no longer interested at this price level and the potential support may well become resistance. Emoji's forward projection zones and extension lines allow us to see this potential real-time support and resistance on the chart for possible entries. We can also plot potential support and resistance using Emoji's massive imbalance indicator. Sometimes we'll see exceptionally large volume at a price level, and it's enough volume to form a floor or a ceiling. We can configure the massive imbalance price threshold to highlight this, and depending upon whether this volume traded on the bid or the ask, we can colour the extension line accordingly to represent the support or resistance. Once again, we're really looking for the reaction of the market when this price level is next visited. Imbalances are the most visible sign of initiative trading activity from large traders, but there's more to interpreting order flow traded volume than simply working upon the basis that an individual imbalance or a series of large imbalances represents a reason to trade in the direction of the imbalance. In video 6, we're going to cover indicators that allow us to track the supply and demand within the market. Before that, however, our next video will go through the reaction of the market to the volume that has traded, especially important when the volume that has traded appears larger than normal. Frankly, this is as important or not more important to be considering. We'll see you then.